Welcome to the TD Ameritrade Network special year in review coverage. I'm Oliver Rennick. Today we're hitting three topics, and we're going to start with Bitcoin. Then we're going to move to two other big retail trades, talking cannabis, and we're talking smokes too. But first, let's check out Bitcoin. Another big year for crypto as King Crypto Bitcoin BTC rallied over 200% at one point, with the highs of the summer coinciding with big moves in bonds and gold as well. That was the topic du jour as defensive and so-called safety trades managed to find their way into one of the most volatile assets across financial markets. Now the question, after reaching a correlation of 1 almost with gold during the month of July, is Bitcoin the safety haven and store of value, or does it remain a risk asset? We've talked about this throughout the year as Bitcoin then pulled back from those highs and looked on the verge of making another deep descent, similar to the one that followed the epic 2017 run. We've discussed this quite a bit with Kevin Kelly, the co-founder and CEO of Delphi Digital, who's joining us here to discuss the topic as we look to round out the end of the year. Kevin, the takeaway for Bitcoin to me still remains this question of how does it trade and where do we put it along the spectrum of risk? So what have we learned in 2019?
Yeah, I mean, 2019's been, in true Bitcoin and crypto fashion, truly volatile, and certainly taken a couple of years off many of our lives, I think. But when you think about it on the risk spectrum, I mean, you bring up a really good point where for a large part of, 2019, really in the summer, we had this kind of, risk-off trade. You had concerns over not only slowing economic growth globally, but also the trade war fallout really pushed investors into these kind of safe haven assets like bonds and gold. And you mentioned that safe haven trade, the consensus around that was extremely strong, especially when you looked at kind of net speculative positioning. And Bitcoin certainly caught a bid throughout all of that, right? Because again, if you think about it as this non-sovereign, hard cap supply, so a non-dilutive asset, that's going to get that's certainly going to catch a bid during a time in which you're potentially moving more towards dovish monetary policies. What's really interesting, though, and I think this is where we're going to stand for at least the foreseeable future, is that when you try and think about where Bitcoin sits on the risk curve going forward, to us, the best macro environment or backdrop for Bitcoin is more characteristic of one that's a risk on than risk off. And so what I mean by that is situations where you have declining equity market volatility, right? So risk asset volatility is declining, accommodative monetary policy globally. And then at the same time, you have, concerns over slowing economic growth, but not necessarily contracting economic growth, right? We can get into, where we think Bitcoin will fall kind of on the, in terms of performance, relative performance during the next recessionary period. But I think those three are kind of big catalysts that we're looking for. You see that type of environment really transpire in 2020. It could be, potentially another big year for crypto and Bitcoin.
Kevin, you guys have described Bitcoin as an out-of-the-money call option on its use case as a store of value. And I've liked that, and I've rolled with that one in my own writing. I've described it as the highest beta safety trade, because this year we also saw gold and bonds trading with a very high correlation, but gold generally swings more. One could argue gold is a higher beta version of safety in this market, with Bitcoin too, then extending that notion, Bitcoin being a higher beta version of kind of gold right now. And I think your guys' description of it being an out-of-the-money call option is an interesting way to consider why and how it can go between trading like safety or trading like risk, as you described, because the big run that started in the spring did happen right as VIX finally broke down below 13. So tell me about the relationship between BTC and equities.
Yeah, so I mean, the relationship between BTC and equities, because again, if we take a step back, the long term, to that point of the kind of out of the money, call option on potentially long term Bitcoin becoming more of a digital gold, that in itself, I mean, the market cap and the size of crypto, but really the Bitcoin itself is still largely or relatively small compared to some of these larger asset classes. So you look at the relationship between Bitcoin and really not only necessarily just with equities, but the outperformance of equities over those safe haven trades like treasuries, for example. If you chart that back, going back, 5 to 7 years, it's not a perfect one-for-one correlation, but you tend to see, periods in which equities are outperforming. You do tend to see, Bitcoin outperforming as well, especially when, you have that decline in equity market volatility that you mentioned that really, kind of bottomed out, so to speak, or had a local bottom right there in April. Right before you saw that spike in Bitcoin as well. What I think is interesting too is that when you think about, we've talked about this on this show before, but the incremental buyer of something like Bitcoin versus, a safe haven like gold, we would expect it to be a higher beta version of potentially digital gold for the foreseeable future, because again, your incremental buyer is much different. The makeup of the investor type that's really focused on Bitcoin and crypto right now is still largely retail driven. You hear time and time again about institutions coming into this market, but we're seeing that in I would say slowly but surely, institutions are coming in, but it's not this big wave of institutional capital. So your incremental buyer is very, very different.
So Kev, the question here as we look forward is, do we know where the floor is though for Bitcoin still, given we've had these big crashes in the past, if that prediction of runaway central banks doesn't come true?
Yeah, I mean, it's a really interesting point too, right? And if you look into kind of our crystal ball, I mean, obviously, it's tough to say that there's an actual floor for Bitcoin's price, but I think, I think we largely stand by that Q4, the Q4 bloodbath that really hit Bitcoin, crypto, and risk assets in general. I think that Q4 2018 bottom is still going to hold, but you certainly could. I mean, you're starting to see it even this week. You're starting to see sentiment towards Bitcoin and the crypto market start to wane a bit. If you talk to people that are in this space, I mean, obviously the true believers are still here, but you are starting to see a bit of mild capitulation when it comes to people looking to invest or potentially put more capital into Bitcoin. So, if you break, below this 8,000 level that we're really kind of pushing right now in terms of support, you could certainly see, some short-term pain ahead. But I think when it comes to, the community is just so strong at this point. The narrative behind Bitcoin for the next 12 to 18 months is the strongest out of any crypto asset going forward. And I think, if you get into the, let's say, the $6,000 to $7,000 range, I do think you have a strong, you're going to have some strong buying support there, because again, you're looking at these, not only the people that are in Bitcoin now in crypto, but also the institutions that are trying to come in, some of which, may actually be looking for that pullback to actually initiate some positions here. Because again, if you look at Bitcoin's performance over the last 5, 7, 9 years, a lot of people are sitting there saying, have we missed this trade yet? Obviously, we're biased to the upside long term, but I think, you'll see some, long story short, some significant buying support, right around that probably $6,000 to $7,000 range. Okay,
Kevin Kelly, always good. Appreciate you helping us wrap up a big year once again with the Bitcoin comeback. Kevin Kelly is the co-founder and CEO of Delphi Digital. Up next, we're going to discuss another big area with growth among young people and millennials that reached a little bit of a standstill. Juul and the breakdown of the vape space had a big role in traditional tobacco stocks. We'll be right back.
/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Feel that? That's the beat of global markets, the rhythm of the world. But to us, it's the pace of tomorrow. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. Nasdaq. Rewrite tomorrow.
Welcome back to the TD Ameritrade Network special year in review coverage. Now it's time to wrap the action in tobacco stocks because it's been a rough 2019 despite a strong start on hopes that investment in e-vapes, Juuls, and more would help the traditional tobacco companies stave off a rough business that's come under deep pressure the previous years. What we got instead was a little horizontal action as legislative problems hit Juul and casualties around e-vaping, as well as advertising towards young people, brought this subject in the forefront of government action. Garrett Nelson is joining. He's an equity analyst at CFRA Research. Garrett, it started out with moves to the upside in Altria, Philip Morris, but as we head to the end of 2019, the action's been kind of sideways. So how do we figure out whether or not this year was successful or just exposed new problems?
Sure, thanks for having me. So what really happened around mid-year is you had an outbreak of illnesses and now dozens of fatalities related to vaping. More recently, it sounds like the CDC has kind of had a breakthrough in discovering what's really causing that, and it seems like it has to do with the vitamin E acetate in Juul products and other e-vaping, e-cigarette products that's really causing the illness as a common factor in all of the fatalities, as a matter of fact. So, but what Juul has done is they've discontinued the sale of all flavored e-cigarettes for now, and we think that's a move to kind of self-regulate instead of having the regulation imposed on you, which is usually the better course of action to take in a scenario such as this. But that's really where things stand. The stocks, Altria and Philip Morris, have rebounded over the last couple months as a lot of the bad news we think was really priced in. The stocks are trading at very discounted multiples, so you have some value hunting taking place. But overall, the tobacco market has been in secular decline for decades now, and that really should continue for the next few years.
As we saw the stock market take a turn towards value-oriented companies in the third quarter this year, Garrett, we saw some of that strength despite some of the negativity around the headlines. You and I discussed at the time that maybe this was a sign that even though the headlines around Juul's valuation getting cut and the problems with some of the products having to come off the shelves, the fact that the shares were able to find a bottom, despite that, suggested to me that maybe there is more of an interest in the sort of core fundamentals of these legacy businesses than there is further surprise to the problems with the growth business. How are we going to be measuring that going into next year?
No, I think that's exactly right. At the end of the day, these are high quality, very high margin businesses. Tobacco companies' gross margins are north of 60%, which is the highest of any industry in consumer staples. So, and they're continuing to grow their earnings despite all these headwinds, which they've really managed to do. So their earnings will be up, for Altria, you're talking about what looks to be a high single-digit year-over-year earnings increase this year, which they've accomplished through continued price increases combined with cost cuts. So they're offsetting the sales volume declines with price increases and cost cuts. So, I think a lot of investors look at these as, very profitable businesses that are trading at a steep discount. So I think you have some value hunting, and the dividend yields are also very high. And there's some question about the sustainability of those dividends longer term, but for the near term, we think they're safe.
Are they one and the same, Philip Morris and Altria, Garrett? Because the fall through of the potential merger here, I think, is pretty interesting, and the companies still just trade very hand in hand in terms of directionally, not necessarily in terms of return, but when one gains, usually the other one does around the same period of time. Will that M&A come back on the horizon in 2020?
So we like Philip Morris. We have a buy on it, and it's because of their international exposure. They're in dozens of countries around the world, and globally, tobacco sales are only declining by about half the percentage as they are in the U.S. Altria is the U.S. pure play. All their assets are in the U.S., and obviously they made some untimely investments with the Juul stake that they paid close to $13 billion for late last year. And, Philip Morris didn't make that mistake. So they still have a very strong balance sheet. And they also have a growth driver, which we're much more bullish on, which is IQOS, which is a heated tobacco product. Yeah. And it's different than e-cigarettes, but, we think we're very bullish on the growth for that product globally over the next few years.
All right, it's going to be a fun year for sure, especially if this value rotation extends through 2020. Garrett Nelson, thanks for joining us here for the Year in Review. Much appreciated.
Thank you.
You got it. Garrett is the equity analyst at CFRA Research covering Philip Morris and Altria. 2020 will also be important for a possible comeback in another group that for some was an out for growth, to find higher growth. That was the connection between pot stocks and big beer companies and more, but they're still having trouble and got slammed in 2019. It was the year of the pot bust.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
You've had quite the career.
I like working. What if my retirement plan is I don't want to retire?
Then let's not create a retirement plan. Let's create a plan for what's next.
I like that.
Get a plan that's right for you. TD Ameritrade.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Hey everybody, Ben Watson, the chart master here with you. We're taking a look at an area of the market that has been interesting investors for most of the year, and that is the cannabis space. CRON is our first symbol here, and we can see that it maybe hasn't been giving people the performance that they've been expecting. We see a long-term downtrend really since the February timeframe, as the stock has been consistently moving in a downward trajectory. We start to see some earnings announcements coming in here that give this stock perhaps a little bit of a challenge, even though it beats earnings here late into the October timeframe. All we get out of this stock is a little bit of a higher low. So investors may be looking for a break of that diagonal downtrend line. At the same time, long-term sentiment and intermediate-term sentiment just barely starting to tick up out of that oversold range. Another stock within this space that is also consistent with that downtrending performance, this is CGC. We can see that again, that downtrend. But on the earnings beat recently, we start to see that move back up just slightly, perhaps beginning to give investors a little bit of a taste of higher highs in the pot space as we start to see this price moving back up, and we start to see investor sentiment starting to tick a little bit higher as well. So for this segment of the market, investors looking for a little bit of turnaround going into 2020. Oliver?
Welcome back to the TD Ameritrade Network special year in review coverage. Thanks to the chart master for breaking down the technicals on the pot stocks. Now it's time to talk some fundamentals. Kronos, Canopy Growth, Tilray, all of them got slammed in 2019. For the first 3 months on earnings that continue to drop the shares. Let's bring in Charles Moon. He's a senior market strategist of equities at Prosper Trading Academy. We've also got our own Alex Coffey here, the co-host of Fast Market. Charlie, great to have you join us on the year in review because we've been talking about these stocks with you for a long time.
Yeah.
2019 was ugly.
Wasn't what we expected or wanted, right?
The bulls, definitely not. Lots of shorts got paid though.
Oh man, talk about it. And investors kept piling in, and you just kind of see it. And you go on Reddit and there's just people just complaining about their losses, and some
their accounts blew up. And
well, it's a little bit further, and I could see how there were some assimilations of Bitcoin, because you heard about the stories that people were taking out second mortgages to buy into Bitcoin. I've heard reoccurring stories in the same for the sector itself. It was just that FOMO, euphoria, gotta get it. Look, it's down. I gotta buy, and
it's funny because we don't have these types of conversations with any other real types of companies, right? Except for the pod stocks, all the crypto stuff that got crazy. These were really the most evident, the strongest evidence of euphoric type bubbly activity in this market. So in some ways, even though it's painful for these who had to learn that lesson, it was kind of an important lesson in some ways for traders. I mean, to watch how we saw these true bubbles form and pop.
Yeah, it really showed the inexperience of a lot of people in the marketplace, and you could see the draw. It wasn't that it was a greed play.
Yeah.
It was the thought that there was just a much greater ceiling available, and that ceiling was able to hit very quickly.
Right.
And so, with experience in the markets, the ins and outs, the ups and downs. You recognize strength, you recognize weakness, but for the new investors, especially the new retail investors, it was immediate growing pains of the worst kind.
We saw the volume, we saw the options activity that happened. As we've talked about, Alex, I'll never forget when Tilray had that move to 300, right? And then we saw the way it unwound. As we see on the charts now, there's maybe a little bit of hope from the technical perspective, because some of these now are either at their lows or they're right at their IPO prices. And so now you've got some of the bull cases where, look, if you got shattered 80% off the highs, maybe now's the time to actually bet on this potential growth market, but it's still not free of risks by any means.
It's certainly not free of risks, and I think it's actually, they are more interesting potentially from an investment standpoint at these price levels, because these were so exciting when they first came to the marketplace. It was a new industry, so much growth, so much excitement on where this might go down the road. This was always a where's this going to be in a 5-10 years type of a space, and now that these price levels are more in realistic, let's say, levels, maybe this is a better place to potentially invest in some of these names if you believe in this going into the future. But I think it's important to go back to 2018, at the end of 2018, because these were the areas of the market that were actually somewhat defensive when the overall broad markets were selling off.
I remember that, yeah.
And there was these stocks were performing okay throughout that time period. And
during the big Q4 rout.
Right, exactly. But what a difference 1 year can make, and really it's a combination of, I think, of a couple things happening at once. I mean, to Charles' point about this bubble bursting and the momentum unwind and the excitement that was into that, I mean, we saw that happen with Bitcoin. We've seen that happen in lots of different assets throughout time. And so that, of course, is going to be a pretty significant move when that does happen. You just don't know when that's going to.
Yeah.
But because of these stock prices being so elevated and happened so quickly, this led to, unrealistic expectations for these companies to deliver on growth. And they tried as hard as they could in some cases. I mean, Tilray's Q3 earnings were a 411% year-over-year earnings growth, or revenue growth rather. And you look at that, and that's an incredible number. Well, when these stocks are going from, sub $20 to $300, 400% just isn't enough. So that was one thing working against them. And then really just there's some serious concerns now about the commoditization of this space. And within that 411% revenue growth that Tilray reported in Q3, there was a 48% average net price per gram decline. So they're selling things for a lot less margins at this point.
Yeah.
And even though they're growing the revenues, they're just not making quite as much money for each one.
I think this is a great point, Charles, when we think about some of the fundamentals here. Huge top line growth, but still having trouble figuring out how to get it to the profitability aspect. And from in an ironic sense, many say, well, this is this huge growth market that we haven't even begun to tap yet. But that also means that maybe we don't even know the companies that are going to be in that market if they get eaten up by their peers, if they can't make the bottom line work. So how do you as an investor or trader try and pick the spots to get exposed to or dabble in?
That's kind of the $1 million question. But for me, I would surround and focus on companies that already have strategic partnerships, strategic ties to, let's say, the major conglomerates. You know, CGC fits into that immediately with STZ owning 51%.
Constellation Brands,
Tilray has ties to Novartis AG. They're doing research together in terms of partnership. They have ties to Anheuser-Busch. ACB is a little bit different. They're kind of the standalone. I don't want to say that they're the empire, but they possibly could be. They've really positioned themselves well for the long term, as opposed to, say, these smaller companies, like Cannabis, for example.
Right.
And we've seen the fall off from Cannabis and Hexo. Hexo is a name I actually find a lot of value in. HEXO, they have a strategic partnership with Molson Tap.
Okay.
And so when I see how a lot of the ties with these companies, with these, what we call the brewers, right? It really just peeks into more if they decide to go from a beverage standpoint in terms of product and where their margin can increase. Or is it going to be about the distribution partnership where they could get it out and expand it nationally much quicker?
This is what's interesting, because as we were talking in the crypto part, some describe Bitcoin as a call option on its potential use case. In a way, I think some of the big corporate investments in some of these companies is kind of a call option on this big disruptive potential if there's further legalization. And even if there's not further legalization, for those that are based in Canada, the idea that, hey, if I'm a beer maker or if I'm a cigarette maker, maybe I want to have an investment in this. And that means there's also potential M&A here in 2020. I think it's going to be really important. Alex, I'll give you the last kind of thought on what trend to keep in mind here over the next year.
Yeah, I mean, there's strategic investments from companies like Constellation Brands in terms of this is a defensive move. If there is recreational, cannabis use or marijuana use in the United States, what industry potentially suffers the most from that? Maybe it's the alcohol makers and the companies like that. And then you look at companies in the tobacco space. I mean, they already have the infrastructure to kind of cultivate a similar product. Maybe they're looking at it as ways to kind of go ahead and add more supplemental business. But it's really been an interesting year in this particular space, and in a market that really has discounted the lack of profitability. I mean, we saw that with Uber and Lyft's IPOs, and really there's just an impatience now for the growth stories that's, I think, really weighed on this particular space.
Yeah, I think a good point too as we consider maybe some of the overall market factors and style breakdown here for taking big risks. Charles Moon, Senior Market Strategist of Equities at Prosper Trading Academy. Always a great contribution to the conversation. Thank you, Charlie, as well as Alex Coffey, the co-host of Fast Market. That wraps up this year in review session. Be sure to tune in to the rest of the coverage right here on the TD Ameritrade Network. Have a great day.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. blockchain making transactions safer and faster. New markets, born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. Nasdaq. Rewrite tomorrow.